Hi there, welcome to Kneppy Invest and welcome to another technical update video where I look at charts, lots and lots of charts, and lots of these charts are starting to look really interesting. So it is April 6, 2025, time in Brisbane is 10:16 a.m. and that would be true if I was recording this video in Sydney or Melbourne because daylight saving came to an end. Now, the end of daylight saving doesn't really affect me at all. In fact, the only difference in my life is that the markets are now opening at 10 a.m. instead of 9 a.m. And that's not much of a difference for me personally. I actually do know some people who, during daylight saving, that 6 months that it is in, they do get up a little bit earlier to align themselves with Sydney and Melbourne. So that's probably a bit of a difference to their lives. But for me, no changes at all. I just get up when I get up, take the dogs for a walk. I suppose the only difference is I now have 1 extra hour to look through announcements. But do I really need that hour? Probably not. Okay, today's video. Oh, by the way, we are in interesting times. I was going to show you this economic policy uncertainty index all throughout the world. And right now, globally, the uncertainty is the highest it's ever been. And that is the main reason we are seeing the markets drop. Here it is right here. So it goes back a fair bit, about 30 years, maybe even longer than that. And we have never seen uncertainty this high when it comes to economic policies. And uncertainty is something the market hates. And that's why, well, one of the reasons why we are seeing markets throughout the world drop or even tank or crash. That's another good word to use. So I'll show you this particular, if I remember, this particular chart in tomorrow's ASX Daily Rundown video. It's going to be quite relevant because I do expect a pretty brutal day on the ASX. That's because of what happened on Friday in the United States. And I'll also show you the futures chart for the XJO. Okay, so the agenda of today's video is fairly similar than all other technical updates video. We'll go through the indices, also have a look at that future index, which I'll do that after the XJO. We'll have a look at some of the other indices in Australia, including tech, bank, ASX200 XTL. Then we'll go through the American indices, and they're looking horrendous because of what happened on Friday. One of the worst two-day periods we have seen for many years. And then we'll have a look at how the rest of the world is trading, including Nikkei, Hang Seng, DAX, FTSE, TSX as well. Then we go through commodities, and no good news for commodities either. Falling like a rock. They all are, or most of them are, maybe not every single one, but I'm looking at it here right now, and they're all down big. And then we'll go through bonds. I would expect, oh no, crypto. Crypto is holding up, which is really interesting. That's probably one of the more fascinating goings on right now, that crypto is holding up. Bitcoin hasn't dropped much at all. In fact, if you have a look at the chart, completely different. No sign of a crash just yet. And then we'll have a look at bonds. I expect bonds to be a fair bit down. The market is probably thinking, we're going to recession, which means interest rates should drop, because to fight recessions or maybe even depressions, the central banks around the world should think about dropping interest rates. They should. And then we'll have a look at the dollar. Dollar collapsed. The Aussie dollar collapsed. And then I'm not sure what I'm going to do when it comes to individual charts. I do have quite a few companies here, but I was thinking of having a look at those companies that are a 6-month high. Not many, I think about 30. And the other thing I noticed is TradingView is changing their stock screener. They've updated or something, and the old screener will be no longer valid. Yeah, here it is. The old stock screener is disappearing very soon. So I'm not sure what changes I'll have to make. Anyway, so I'll get to that towards the end of the video. Now onto the XJO. And we have reached a new lower low because of Friday's session. Pretty bad one. Interesting 2 trading days, because on Thursday we saw an intraday rally. And I still don't understand why people were buying, even though I was in that party. I actually did buy 1 position on that day. But it was weird because American futures were going down. The other Asian indices were not intraday rallying. So there was a little bit of enthusiasm that this might be a buy the dip situation in Australia on Thursday. And I think that enthusiasm completely collapsed on Friday. There was a little bit of enthusiasm in the morning on Friday, and that was not strong at all. So there was remnants of some sort of buy the dip on Thursday and Friday, but I think that won't be evident on Monday. However, because we have had 2 days, down days, Wall Street has had 2 down days, there could be expectations in Australia tomorrow that there will be a bounce on Wall Street on their Monday session. And if that does happen, and we saw this during COVID-19, that a lot of times our trading was dependent on what they were, or what we were seeing on the American futures. If American futures are up, you would have seen a really good bounce in the afternoon on the ASX. So there is a chance that might happen. But anyway, we are starting to see some bearish signs. A lower low, that's the first sign of something moving into a downtrend. And if the next high is lower than the previous high, that's also a sign of a downtrend developing. Now, the XJO isn't down all that much, well, compared to some other indices. So XJO currently is only down 11%. I probably should show you equal weight. Maybe I could do that another time. Anyway, so XJO is down 11%. So that's still correction territory, but not quite bear market territory. Still has to drop another 11% or 9%, which means it would have to get down to about 7,000 or below 7,000, or near the bottom of the trading range, which is currently around about 6,850. So unless it drops 800 points tomorrow, which it won't, we still will be above the trading range and not in bear territory. But it is looking quite negative. And the week was pretty bad as well. Yeah, the week was pretty bad. So we have seen 5 bad weeks since the middle of February. And this was the worst, I think, down 3.94%. Yeah, it has been the worst week we have seen during this little downturn. So if you're just focusing on the weekly chart, you probably wouldn't be overly panicking right now because we still have uptrend signals. And I do know some people who look at monthly charts, including Talking Wealth, and they saw nothing to be concerned about, which is, I suppose, true. But if you do look at the daily chart, there's definitely things to be concerned about. And the other thing to be concerned about is what's going to happen on Monday. And if we have a look at the futures, this is AP1, SPI 200 Index Futures. So currently down, but probably not open now, currently down 4.29% for Monday. And depending on how much it falls, we could see support levels broken on the XJO. So that levels, those important levels, sort of between about 7,570 and around about 7,600. So I definitely can see us falling below the next support levels. And then after that, well, who knows where the next support level is. So definitely potential for more downside. And the main reason behind that is uncertainty. It's all about uncertainty, and who knows how long this uncertainty is going to last. It's really interesting. I did and have listened to quite a few podcasts, and a lot of people making predictions about what's going to happen in the future. There's some bulls out there still saying that there's going to be a V-shaped recovery, talking about, hey, remember COVID-19, but this is completely different. And there's others being more rational, saying, hey, things are not looking good. You have to be wary. You have to have plans. And there could be more potential downside, particularly if we do see a prolonged trade war. Is that going to happen? No one knows. So at this point in time, actually in all times, I think it is quite silly to make predictions because more than likely you're going to be wrong. And if you go fully in on any of your predictions, I think that can lead to disaster. So we have no idea what's going to happen. Maybe this is the bottom. Maybe Monday's session will be the bottom, and then we're going to rally after that. So unless you do have a time machine and you've gone into the future, I think it's quite silly to try to make predictions about the future. Anyway, unless you're always bearish, like someone, and then eventually you're going to be right. You know, that's an old saying, clock is always right 2 times a day. Anyway, let's have a look at some of the other indices on the ASX. We don't have to look at the XAO because very similar to the XJO. What about small caps? Ooh, well, that is ugly. In fact, some of these I haven't had a look at. It's at a support level, and I think this support level is going to be broken easily. So right on that support level right now, and those are the lows we saw back in August of last year. If you have a look at the weekly chart for the XSO, yeah, still well above the lows we saw back in 2022 and 2023. So that's 2,600. So that's probably the next level. But right now, it does look a little bit bearish, particularly with what we are expecting on Monday's session. And overall, XSO is down from its highs. Let's have a look. Down, only 12.29%. I thought it was going to be more than that. I'll be honest with you. I thought it was going to be more than 12.29%. But again, I think it's going to be a bit bigger because of Monday, unless we see a really good intraday rally. Okay. What about the X? And by the way, it's bearish. I mean, look at it. Down, nice little bounce, hit the 25-day moving average, and down she goes. So that's sort of the possible initial stages of a downtrend or developing downtrend. What about the XTL? How are the big caps doing? And this one, not quite, it's in a support zone. We'll call this a support zone. Yeah, we'll call it support zone. Again, I don't think this is going to last. Where is the rectangles? I always forget where the rectangles are. That's right. If you go back, there is a support zone sort of in this area right there. And this goes back to 2023, where the XTL just sort of ranged in that zone for quite a while, and then eventually went above that zone, and now we're back into that zone. So the bottom of that zone is about 4,240, and there's a chance it might move below that zone on or in Monday's session. So not quite as bearish as some of the other indices because we haven't gone below, or this index hasn't gone below the previous low. So if you go back to the XGO, it has gone below those lows, and the XSO well below those lows, and the XTL, the bigger caps, a little bit of strength here. And I would say maybe there are some investors sort of rotating into the safer companies, and I would say some of these perceived safer companies are not safe at all. Hello, CBA, still significantly overvalued, and I was shocked to see it was up on a Thursday session. There's no reason for it, because if the fears are right and we do go into recession and a deep recession, CBA share price will plummet. It will fall 50 to 60%. And that's almost guaranteed if we go into a deep recession. That's a big if. Anyway, so don't be falling that. Don't be thinking the banks are safe. They are not safe. They're cyclical, highly cyclical. We have seen that through history. Anyway, so XTL showing a little bit of strength, comparatively speaking, and I think that's because some investors are rotating their money to these bigger companies, including Woolworths, which I think is fine, and Coles. I think that's fine. And Telstra. I think those three companies are fine, and they're all three in the XTL, and I'd say those are really holding up the ASX200. Tech, probably not the same. This is horrible. Horrendous chart, and for those who are heavily invested in tech companies, you've probably seen all your tech companies just drop like a rock. Even the little bounce we have seen in the other indices, very weak for the tech, and it's just horrendous. And I would say, where's my ruler? I would say, let's try have a guess without thinking. I would say the XTX is definitely in bad territory right now. It's dropped over 20%. Let's have a look. Oh yeah, easily. It's down 24%. So the XTX or the All Tech is in bear territory. In fact, it's a bear market. This is the definition of a bear market. Now, the last bear market for the XTX, if it goes back that far, this hasn't been around long. Oh, it's been around longer than I was thinking. Oh, it was introduced just before COVID-19. There you go. But the last bear market for the tech was back in 2022 because of rising interest rates. Now, there was, I suppose, a bit of uncertainty there. How high will interest rates go? But definitely different now, because there was no thought of a massive or possible really deep recession back then. It was just rising interest rates, and tech companies who have all their profits well into the future, those companies are valued less, because that's how you value companies. You look at the present value of all future cash flows, and present value is affected by higher interest rates. So during this particular sell-off, or bear market in 2022, the XTX dropped 46.15%. Yep, 46.15%. There you go. So this happens quite often. Anyway, so the XTX looks pretty weak. In fact, in the last week, it dropped, let's have a look, 7.5%, and not as bad as the 24th of February week, which had dropped 8%. You know, you could, I haven't thought about this, you could, I wonder, apply the 200-week moving average to some of these indices just to see where they are. I've actually not done this yet. And if you do that to the XJO, yeah, over the last, say, 15 years, maybe not that long, 10 years, whenever the XJO does fall below the 200-week moving average, that has actually been pretty good buying. And we're still, or the XJO is still above that level or that moving average. XSO probably, yeah, not like that. XTL, yeah, I'd say that's pretty similar. And the tech has not been around long enough to get any meaningful information. Okay, so that's something I'm not done yet. Maybe I'll do that in the future. Now onto the banking sector, and this would have shown a little bit of strength. Yes, because, yeah, definitely. Didn't really suffer much on Thursday. Don't know why. And then we did see it drop a little bit on Friday. But again, I think people are moving some of their money into the banks thinking they're safe. Wrong. I think that can be a mistake. And we saw that during GFC. The banks tanked. And they will tank again if we do go into a crisis, an economic crisis. Okay, that's all I really have for the Australian indices. Now let's move on to the American ones. And these are going to look really ugly. Absolutely ugly because of what happened on Friday session, and that's why we are embracing for a massive sell-off on the ASX. Let's have a look at the NDQ or the NASDAQ. So I think the previous day was the worst day since COVID-19, and then this day was the worst day. So the two worst days since COVID-19 have been the last 2 days, down 6.07%. We're still nowhere near the worst days in COVID-19. There is a possibility the last 2 days have been worse than any 2-day period during COVID-19. Let's go back. We can do that right now. We can do that right now. And I'm just seeing if there was 2 really big down days. Yeah, no. Or there's so much volatility during COVID-19. And there were some really big down days, like down 12.19%, but then a rally the next day, 6.5%. So these 2 days in the United States were probably the worst 2 days we've seen, I would imagine, since the GFC. Now, even during 2018, when that was the last trade war we had, there were a few big down days in a row, but nothing like we've just seen. Yeah, nothing like we've just seen. And by the way, this trade war was significantly, in terms of wars, smaller and less impactful to the world economies than what we're experiencing now. And you can just see what harm it did for the NASDAQ. NASDAQ dropped 23.34% during that period. If you go all the way back to the GFC, I would imagine we had a few really bad days, a few really bad twin down days in a row, particularly in October 2008, because that was sort of peak badism. And I'm looking for 2 big down days. Yeah, there was 1 day or 2 days where we're down, or NASDAQ was down 4% and then almost 6%. Anyway, so yeah, so this could be possibly one of the worst 2-day periods. I should have actually had a look at Twitter, because you do get a lot of really interesting information about this sort of thing on Twitter, and that's what I should have done. I haven't looked at Twitter for the last few days. Anyway, in fact, I don't have to do this. I can just go here, click on that, goes back to the start. Anyway, so this is looking horrendous, doesn't it? Now, in saying all that, if you have a look at the last 2 significant lows, so this was back in April 2024 and then August 2024, we're still above that. Well, the NASDAQ is, not we. So if it drops below that, 17,000, that would be a really bearish signal. I would expect this is significantly oversold, and I wouldn't be surprised to see a bounce in the new week. And if we don't see that bounce, I think the chances of bounce then are maybe not exaggerated. The chances of bounce increase significantly, and then that bounce, when it does happen, it's going to be a fairly vicious bounce before we see it sort of maybe rounding over. But I don't think that would be a V-shaped recovery, but it could be. But it all depends on uncertainty and whether we get more certainty about tariffs. Anyway, so the whole reason uncertainty is leading to this sell-off is what if we do go into a deep recession, maybe even a depression? So that is a concern. And we're starting to see companies fire people because of tariffs. So Trump is thinking it'll bring jobs back into America, manufacturing jobs back. Well, first of all, no, not necessarily so. And a lot of manufacturing now is automated. So where's going to be the jobs? And the other thing is, the problem is not enough jobs for the people. It's, will there be enough people for all the jobs you bring back? Because you've set back all these illegal immigrants who are doing all the shitty jobs that the people didn't want to do. The locals didn't want to do. Anyway, so that's the NASDAQ and a pretty bad week, I would assume. Let's have a look. See. Down 9.77%. And in terms of the worst weeks, even during 2022, we didn't see any really bad weeks. There was a 7.5% drop. What else? 5.7, 5.8, not 10%. There was a no. I'm just looking for some sort of, when was the last time we had this bad of a week? So COVID-19, I would say. So down 10.4% one week and 12.52% just before we saw a bounce. So that makes sense. And even during 2018, the worst week then was down 8.3% just before we saw a bounce. So maybe, so those two instances, we had the worst week just before the bounce. So you could actually argue, maybe now that means we're due for a bounce. We're due for a good week. S&P 500, do I have to look at this one? It's not much different, is it? Yeah, not much different. So let's turn attention. The reason I've actually included S&P 500, I've just noticed so many people use it. Anyway, so on to the Dow Jones. A pretty bad week for the Dow Jones, down 7.86%. And it wasn't looking horrendous before this week, but it was starting to look a little bit bearish. But yeah, a really bad 2 days for the Dow Jones and down 5.5% on Friday session. And that's another reason why I expect us to have a really bad day. Previously, it was only down 3.98%, so we didn't drop as much as what we could have. But because of Friday, yeah, I do expect a pretty bad day for Australia, unless, again, the American futures are rallying. And I don't think I have to go into the past to look at the worst day. This is probably the worst day since COVID-19. Not probably, I'd say it is, with pretty good confidence. Russell 2000 had a really bad Thursday, and it was the worst of the indices, so small caps, and it was probably the best of the indices on Friday. So only down 4.37%. So when you can say you've done relatively well and you're down 4.37%, that is not saying much. And there was a bit of a bounce on the Russell 2000. So a little bit of buying came in for small caps on Friday. There you go. But in fact, I didn't do this with Dow Jones. I just want to see how much it's down from its highs. And let's have a look. Dow Jones is now down 14.92%. And Russell 2000 is down from its highs, down 27.62%. And don't forget, for the Talking Wealth people who said there was no chance of a crash because of Trump's tariffs, and I wonder if they've taken down that video. I probably would. S&P 500 is now down 17.46%, so very close to a bear market. Remember, they were saying, it's found support at 10% down. Now it's down 17.46%, and they did not have a look at futures. If they had a look at futures, they probably wouldn't have recorded that video. Okay, I'm being a little bit unfair, but it's funny. Now on to the international indices. I'll start off with Nikkei. And I would assume most of these, if they weren't looking bearish before, are starting to look even a little bit more bearish, and that is true for the Nikkei. And in fact, the Nikkei has been starting to look weak over the last month or 2 months after showing no signs of any trend for about a year. So really, do we have to linger on the Nikkei? Hang Seng has been showing some strength, and even though it has dropped a little bit, we're not talking about a massive drop for the Hang Seng. In fact, it's only dropped from its highs. It's only dropped 8.76%. So relatively strength in the Hang Seng. Oh, I don't know if I can get rid of that. Oh, there it goes. What about the DAX? So we have seen relative strength, without doubt, in the European markets. In fact, I have read now there's quite a bit of capital flowing from the United States to Europe, and that is why we are seeing the Europe markets being supported. And their indices not looking as bad. But we did see a bit of a sell-off in the DAX on a Friday. So a lot of the negative sentiment is now starting to translate throughout the world, including some of these indices and places that were looking a little bit stronger. So that's what we're seeing in the DAX. A pretty bad day on Friday. Even the whole week was looking pretty weak as well. I would say it's down 8%. But if you have a look at the weekly chart, it's actually still an uptrend. But this could be a trend killer. Ooh, trend killer. So we have trend killers for individual companies. Is this a trend killer for an indice by the weekly chart? In fact, I only looked at daily charts for trend killers, and you don't really, maybe you could say Friday was a trend killer. FTSE looks like it was the same, down 4.95%. And look at that. Whoa. So FTSE was looking pretty good until the last 2 trading days. So this Trump tariffs and the possible Trump war is affecting everyone, all countries, and it will affect all countries. If this is prolonged, we are going to see recessions in most companies. I think that is an absolute. If we see a prolonged trade war. The last time we saw a prolonged trade war, global trade war, was 1930 to 1932 because of tariffs. Tariffs. It's really interesting. I was listening to Ausbis the Corp. So Thursday, Friday. Thursday they had Howard Coleman, and he was doing the whole Smoot-Hawley 1930s, tariffs are bad, and he's Team Invest. And the next day they had Mark Morland, who was Team Invest. It seems like he might have gone from Team Invest based off the description. And he was so glowing of tariffs and Trump, but he didn't understand how they calculated tariffs. So he thought if a company had, on the left-hand side of that, that piece of paper that Trump was showing everyone, if he saw that, Vietnam had 67% tariffs, Mark Morland thought they must have had 67% tariffs. And in fact, I'm pretty sure he said, USA is being kind by halving their tariffs. But again, we all know now that's not how the administration calculated the tariffs. They just had a look at the trade deficit. And I'm pretty sure Mark Morland, he's a smart cookie. He will find that out, and I won't say he'll have egg on his face, but it's looking pretty silly saying that these are real tariffs and tariff rates, but they're not. So hopefully all that news has filtered through. Anyway, so TSX, Canadian, and I suppose they are a proxy for us in a way. Fairly similar economies. They're a little bit bigger than us, but definitely mining and financial dominated. And they were down 4.69% on Friday. It doesn't mean we're going to be down that much, because I'm really interested to see what happens in the afternoon once we really see those American futures. If American futures are down, we could be down 4 to 5%. I think that's the worst case scenario. I think the worst case scenario is down 5%. Best case scenario, in my opinion, would be only down 1%. Yes. And after maybe a nice little rally in the afternoon. Okay, on to commodities. And no safe haven here. So gold down 2.5% on Friday. So we will see this. And by the way, it's very important to know when the weakness was. Because, we saw a little bit of a rally in gold. Yeah, most of the drop in gold happened during Friday night our time. But we did have seen gold sort of stabilise on Saturday morning. So I suppose that's good news. But yeah, gold had its weakest day for a while, but it's still an uptrend. And this was always a possibility because it has gone up over the last, say, 4 months or so. And it's always healthy to have a period of consolidation or even a slight pullback. We don't want to see this pullback continue for an extended period, however. It's only one day, so no reason to panic when it comes to gold. Now, some of these other commodities are looking much weaker, and that includes silver down 8.57%. And in fact, that's 2 really big down days in a row. So there is a bit of a disconnect between gold and silver, which is interesting. Now, silver is at an interesting support level, which was the previous lows we saw back in December. So I suppose that's one thing going for it. In fact, you can extend. Yeah, there you go. Already had a line there. It's going to extend it. So that is an important level. And it's right on that point. And the volume coming through in silver was quite high as well. So 2 big down days for silver. In fact, the week for silver, I would assume it's down 15%. 16.04% down for silver. Maybe a buy the dip situation, however. And I would assume many silver companies fell like a rock. So what are silver companies? We have ASL, that's Andean Silver. Let's have a look to see how some of these companies did. Yep, in fact, it was down the whole week. What's another one? Sun Silver. I forget the ticker for this one. The SS1, that's it. Sun Silver. Yep, and what about Adriatic? There's another silver mines. Yeah, silver mines. Adriatic Metals. Not as bad as I thought they were going to be. And what's the other one? Silver mines. SBL. There's probably other silver companies. That's not looking, actually, that chart doesn't look that bad. And yeah. Okay, so what about copper? This one, I would have, if I had to guess which commodity collapsed, it would be copper because there was a rally, which I didn't understand. And this is copper. And I think this is just Dr. Copper coming to play. People going, why is copper up when there is a massive increase in chances of a recession? And that will affect copper demand, significantly affect copper demand. That's why it's called Dr. Copper. It's like a proxy for the health of the economy. And if we go into recession, the health of the economy is pretty bad, so copper should be down. And we have seen that during the week. Just a massive sell-off in copper. And we have seen that in the prices of some copper companies. In fact, in the week, copper was down 17%. Let's have a look. 14.19%, a little bit off there. So pretty bad week for silver, pretty bad week for copper. And I do know Sandfire was down a fair bit. So this is probably the biggest copper play on the ASX. Oh, look at that. Sandfire down fantastically. Down 18% for the week. And there's some other small copper plays on the ASX, but I won't look at those right now. Iron ore fallen below $100. There is an argument, and I have heard this argument, that there is a possibility to protect themselves from tariffs from America, that Chinese will overstimulate that country, and that would be beneficial for us. So you would see in those sort of situations, you would see iron ore prices rising. So hopefully that happens. But other than that, iron ore is just going sideways. No trend at all. Uranium just keeps on dropping. A new low on Friday. No reason to get excited. I was going to listen to a Macro Voices Uranium podcast, but I just deleted it because it was an hour long. What was it called? Macro Voices. I shouldn't have deleted it. Let's have a look at what it was called. I forget who was the Mike Alkin. Uranium supply is in structural deficit, and the fuel buyers don't get it yet. But all you have to do is look at the chart, and if you have a look at the chart, uranium is struggling. That's all I need to know. Uranium is struggling right now. Oil has collapsed, and the main reason behind oil collapsing is because decreased demand for oil during recessions. That's it. So people just looking forward, going, oh, there's going to be decreased demand, and it's fallen through my purple box. I believe I wouldn't be surprised to see oil rally, and this is a good time to buy some oil companies. I know some people always tell me Woodside is not oil, it's gas, but I always like to have a look at Woodside, and oh, look at that. It's down 20. Ooh, when's the last time it was this low? Would it be 2000? Oh, okay. I was going to say 2020, but yeah, 2021. And what's another? Santos. Let's have a look at Santos. I have been hearing about people thinking Woodside was so cheap for like the last 6 months, but share price just keeps on dropping. Santos chart, yeah, down a fair bit as well, and down 9.44% on Friday. And this should drop a lot because of what happened with oil on Friday session, which was after. Let's go back to oil. Let's really have a look where the price dropped. Oh, we have seen a bit of a rally. But the low in oil was around about midnight on Saturday and or around about 9:30 p.m. on Friday night. And once our session of trading had finished, yeah, our price of oil collapsed after that. And that would have been around retaliatory tariffs from China, I think. I'm trying to remember when those came out. It was during that period. Gas down a lot. So gas chart actually didn't look that bad and still looks okay, but a fair bit of volatility with gas. Lithium, no reason to be thinking about lithium right now, although we did see lithium prices were up on Monday, up towards 10. No, anyway. Coal down. Yep, and this is all about decreased demand for energy. So coal, uranium, oil all down. And what about tin? Tin might be the best looking commodity. Not in terms of looks, the chart. In maintaining high volume. So this is the Metals X play. And this is all because of a mine closing in, was it DRC because of political turmoil or something like that? But that could change at an instant, and Metals X chart doesn't look that bad. Nickel, Paladium, bit of a collapse there, and cocoa. Ooh, go cocoa. Oh. I was going to say cocoa down 7.74%, but that's after a 3-day rise. Okay, so that's commodities. My favourite commodity there probably is still, I do like tin. Tin's showing some strength, but that is around issues of supply constraints because of that one mine in DRC, and that could change at an instant. Other than that, gold is still without doubt my favourite commodity. Now to cryptocurrency, Bitcoin and Ethereum showing a bit of strength because they're not dropping like a rock. Not really going anywhere, but they're not dropping. So this is probably the most interesting thing happening right now, in my opinion, that we're not seeing any downside in Bitcoin. So possibly we are seeing a bit of a rotation into cryptocurrency, protecting your money. Maybe that's what's happening. I don't know. But this is interesting. I expected Bitcoin and Ethereum to drop like a rock. In fact, Ethereum is up in the last 24 hours. And yeah, again, no big drop in Ethereum. Still in a downtrend, however. Okay, bonds. I would expect bonds to be down, and they are. So this is the bond market saying chances of recession probably increasing, meaning decreasing interest rates. We can see what happened between September and January. That was a time when they knew Trump more than likely would be in presidency, and the bond market's pretty smart. They knew he'd be in presidency. He likes tariffs. Tariffs were going to be bad for inflation, increase inflation. That's why the bond price yields were rising. And then I think they came to realization collectively in mid-January, just before he was put in power, that, hey, if this does happen, if there is a trade war, it's going to be bad for the economy, and eventually the Fed will have to decrease interest rates. And that's why I think, the yields are dropping. And in fact, we've had a moving average crossover. So there's trying to move into a downtrend. And Aussie dollar collapsed. I expected different. So most currencies should be rallying against the US dollar. We didn't. We dropped. So that was the one little surprise. And again, if China does do massive stimulus, that will help our dollar. The other thing I should also mention is a lot of Americans, when I say Americans, I mean politicians over there, want a weaker American dollar. And there are some arguments. The whole reason they're doing this, the Trump administration, is to weaken the US dollar to make their exports look more attractive, which is what would happen. It's one of the reasons why governments don't mind a weak currency, because it does make exports more attractive. Okay, so I'm not sure what will I have a look at. I do have quite a few charts. I've just included possible charts. I'll have a look at a few of these. I actually did mention in yesterday's answer and reply video that I will have a look at Kelsian. So this is the first company I put in this list. Our share price in a downtrend, but the price of Kelsian right now is at really interesting levels. And if we go back to the lows in COVID-19, in fact, the low there was $2.42. Yes, that was a low during COVID-19 for Kelsian Group. And right now, the share price of Kelsian is $2.52. So we're right near those lows. So maximum or peak pessimism may have been priced into Kelsian. And is the market overreacting here? That's a really interesting question. So there could be value for Kelsian Group at this level. And yeah, I wouldn't say I'm interested, but I think it is interesting. I'm going to pick and choose. Oh, Guzman Gomez has a trend killer chart. So I'm still looking for trend killers. I found a few more, and Guzman Gomez has it. Share price was in an uptrend. They released results on the 21st of February. Share price dropped 14%, and the share price has kept on dropping. So another instance of a trend killer here. Now, what I'm looking for, not only trend killers, but also trend killers that fail, false signal. And I'm also looking for trend killers that go the other way, like APA Group and a few others. On New Farm, APA Group, and I've shown this a few times now, APA Group, downtrend, trend killer, share price going up. The other one was New Farm. Was it New Farm? I think it was. Oh, no, it wasn't New Farm. It was NHB, NHF, NHF. Share price in the downtrend, showing signs of maybe turning, and then good results, and the share price has popped up. Okay. Oh, DGT, this is Digico. Digico Infrastructure, they listed back in late 2024. A lot of hype around, what do you call them, data centers. And the price of this particular infrastructure REIT has dropped in half. It's halved. And I would say this is oversold, and there will be a bounce. I've included also a few companies that are showing strength, like ServiceStream, sort of the infrastructure service company, not much dropping here. So this could be a defensive play, possible. What else? For some reason, I have NWR Holdings. Why do I have this one in here? Oh, this is another trend killer. Yeah. Share price in an uptrend. And I was actually trading this at this point. And then share price dropped 9.45% on the 30th of January. And I got out straight away. And look what the share price has done since then. So another case of a trend killer. And what can happen? And this is why I'm starting to look at this and more, look at these sort of events. Now, there was also a possible trend killer for NW. This could be a false signal. On the 5th of August, share price dropped 7.9% and then rallied. So maybe it's very important what happens in the days after a possible trend killer. South 32, why did I include this one? Oh, that's why. Price of South 32 has just fallen, but it has hit $2.80, which is an important level. So the last two times share price of South 32 hit this level, it has bounced. And this has been the last year and a bit. What else? For some reason, I put Aroa Biosurgery in here. Oh, another trend killer. Yeah, that's an obvious one. Share price down 24.4%, and share price kept on decreasing. Now, the reason I'm looking for false signals is I just want to know how many times you're likely to get a false signal. And I've seen way more non-false signals. And this is the reason why you see this sort of signal, you just get out, because we have seen time and time again, when you get this sort of trend killer, share price more than likely will keep on dropping. And that's why the reverse could be really good, because if you have a share price of a company in a downtrend and then the share price pops up, like APA Group and NHF, then the opposite is going to happen. Share price will keep on rallying. So that's why it can be important. you increase your chances of success. Oh, Treasury wines. I think this one is share price is at interesting levels. If we go, I've got a line here going back to, let's have a look at the weekly chart. Oh yeah, this is COVID lows. Yeah, COVID lows. And I'm pretty sure this was around about those time of Chinese wine tariffs and that sort of thing. And Treasury wine share price is at those levels right now. So for those who do like this company and think this is a really good long-term investment, now's beautiful buying time for this company. Macquarie Group, share price collapsing. So unlike the other banks, Macquarie Group, I suppose the perceived thought out there is this is more susceptible to a downturn in the economy. I might disagree with that. And I think the reason behind this is what happened to Macquarie Group during the GFC. So let's go back to the GFC for Macquarie Group. Oh, I've already got it in there. So I've got it in there. So Macquarie Group share price dropped 88.25% during the GFC. So there is that perception that this is a company that, I suppose, could be cyclical like that. What else? I've got a few other companies whose share price is dropping and just dropping. Oh, yeah, OFX Group, share price near COVID-19 lows. This is a company I've traded in the past. And I think, yeah, Credit Corp. I think this is a really good one. So Credit Corp share price is getting close to lows in October 2023. During COVID-19, the low in the share price was about $6. So still 50% from there. But this could be a proxy for the overall economy. Some people might say the complete opposite, that this company should perform really well during downturns. But I went back to look at how this company performed during the GFC, and it was a disaster. So this could have been company specific, but the share price of Credit Corp dropped, let's have a look, dropped 97%. Now, maybe the company is completely different, but I'm just wondering if even some people have said this company should benefit from a recession, but I'm wondering, is that true? Oh, and AMP, this is a really good example of me. I was trading this one, AMP. It was looking really good. I like this chart and a trend killer. So this is the case where I just got out. Share price dropped 14.86% on the release of their results. And I got out on that day and the share price has kept on dropping. Now, I will show you a case where I did get out and the share price then rallied. Now, Prenti sort of did that. I sort of Trendkiller here, and share price has rallied, but the rally has been not that strong, but there has been a rally. So this is a case where the signal was a sort of a false signal. There was another one, but the other thing I should mention with Prenti, we did see a bit of buying on that day. So there was a bit of a tail. So maybe that was a sign that was not a selling situation. And the other one was Elders. This was going back a few years, and it wasn't a true trend killer situation. You'll see by the chart or the one-day candlestick. So share price on the 8th of April 2024, so 1 year ago, share price dropped 24.42%. And I thought, that's a trend killer. And the share price actually rallied after that. So again, I think maybe the few days after the trend killer event can give us a good indication of whether it is a real trend killer or maybe a false signal. By the way, the share price did rebound to back where the highs were, but in fact, the share price now is lower than it was on that trend or possible trend killer event day. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. If you'd like to support my channel, you can leave a donation. I'll leave that link in the description of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.